Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics, which if you're a member, you know which topics: financial, commodities, and or wealth building topics. So let's dive in there. Let's take a look, see what is going on. If you want to follow me at Financial Finance, join our community, finding-value.com, where I go over all of these different sectors, looking for potential investment opportunities. Mayday coupon code. So, Peter, he says platinum set for record deficit, but prices yet to recover. The largest deficit in over a decade. WP, it's the World Platinum Investment Council, I think is what that stands, forecasts a 2024 shortfall of more than 1 million ounces. Is that a big shortfall? Yes, it is. Uh, the market is about a 6 million ounce supply for production, and it's about an 8 million-ish ounce market supply with recycling. ETFs and Chinese buying are helping boost platinum demand, and same with Finding Value Finance. He is helping the demand side for platinum. So that's there. We've got correlation economics. It says, I saw this gold oil gap coming from a mile away. Well, aren't you the smartest person ever? Well, this is the gap when you do the gold to oil ratio. Oil is incredibly cheap. It is getting cheaper based off of the market conditions. The market conditions of a potential slowdown is causing people in the market to sell oil and to buy gold. And that is increasing the ratio between the two. In my opinion, there's going to be a time in the future, probably not too far in the future, that oil will be a really, really, really good investment. Probably one of the best asymmetric investments in the market. If it continues to fall and gets into the 60s is where we're at, 66.19. And if we do get to something like the 50s, that is a really good opportunity in my opinion. I do not think that we are going to stay down there forever. So we could have a window of opportunity in oil to accumulate shares at very cheap prices. And on top of it, a lot of the companies are way better established in terms of their balance sheets and what they're doing with the money that they've got. Richard Meyer says wind and solar are among the fastest growing energy sources in decades. Then I wondered, what would it look like if I included U.S. shale gas? So we've got here, how fast have new energy sources grown? That's in exajoules of global energy supply. We've got solar. Oh, it's so amazing, just ripping it. Wind, even better. Look at that. I mean, it's not fast growing faster, but it's growing really good. And then we've got nuclear since 1975. And then let's throw shale gas in here. Boom! This is where we are getting the majority of our energy from, probably. This is one of the fastest growing energy sources in terms of total energy into the system. This is our future, shale gas and other gases around the world, in my opinion. Nuclear, it's gotta catch up, man. We have a lot of building to do if we want to use nuclear and catch up to U.S. shale gas. We got to start building this stuff. I'm very pro-nuclear, but apparently the market isn't as pro-nuclear as I am. Coming on down, we've got Anus Alahaja. It's probably a Nas, but I get it. Coal India to spend $8 billion on coal-fired plants near mines. Company to invest most of the money in 6 to 7 years. State-owned firm has approval for 4.7 gigawatts of capacity. Wait. I thought we were going away from coal here, guys. Well, coal's going to be a really good investment for probably a very long time, longer than what most people think. I heard an interview, I can't recall what it was, but one of the people who looks deeply into this stuff said that India and China, they're not going to go straight to renewables. They're going to pass through coal. So the best thing that you can do for the environment is to pass through coal as fast as possible to get to the other side to what he would say is renewables, which is potentially cleaner in their opinion. Um, I don't think that they are cleaner, and I think there's a bigger environmental problem with solar and wind, in my opinion. But that was his opinion. Scroll on down. It says investors are dramatically overestimating an oil glut. Carlisle Jeff Curry says concerns about supply glut in the market are completely overplayed, in his opinion. Do you agree with that opinion? I'm in the camp that it is overplayed. I have listened to a lot of the insiders and what their opinions are. And I also know where we're at in the real estate cycle. And I do think it is probably a little bit overdone. Now, does that mean that prices can't fall further? It definitely can. And I know that sentiment can wash out even further. But I'm looking for entry points over the next however many months. And if you guys like oil, I love talking about oil. that's that's it. Coming on down, RevCap, he says, this is what the Fed calls a soft landing. I mean, you do have to laugh a little. The most ironic outcome is the most likely. And this is US housing affordability is worse today than the peak of the last housing bubble. The median American household would need to spend nearly 44% of their income to afford the median priced home for sale. And that's what we've got there. Now, if they lower rates, obviously the affordability will get better. And I'm watching to see if home sales go up and how the housing starts react to it. Also, construction, employment. I'm watching all of those things. But this would signal that we do have a tight market. We are not in a loose buyer's market. We are in a tighter, probably between a seller's market and maybe even slightly leaning towards the buyer's market now to some degree. But I think we're still in a seller's market in most areas. Coming down, invest in assets. Everybody wants a 10 bagger. No one wants to hold the stock when it drops 50%. And guess what? The majority of 10 baggers that I've had in my life, I think every single one of them has dropped 50% or more. That includes the 13 10 baggers that are currently in my portfolio, which are mainly oil and energy service companies. Some of them are dropping in and out of the 10 bagger status as we get pullbacks and whatever. And my account value is going up and down at pretty big levels. I have lots of volatility. Some people say that volatility is risk. I say that volatility is life. It gives you the ability to get these 10 bagger plus returns. As long as you know the cycle and you know as much as you can about the company, it gives you that conviction to hold through it. Some people ask me how, does it get easier holding through these pullbacks? It depends on what you are as an investor are doing to make the pullbacks easier. You need to know that they are going to happen no matter what. So then you're going to have to figure out a way to accept those big pullbacks and have the conviction to continue to hold on for the investment to work over the period of time that you want to hold it, so long that you have favorable market conditions. You don't want to hold, oil stocks through a deflationary bust or anything like that. You want to hold them through you might have to go through a recession or something like that. The majority of these bull markets occur with a couple of recessions in them. 2001 was a recession in an oil bull market. We had early 70s and late 70s also. So we had like 1970, and then there was one in the mid 70s. So there was a couple of pullbacks there, and that's what those big waves were. It was pullbacks within the big overall move. So if you can identify the big move where it becomes undervalued at the beginning to overvalued at the end, and you have a couple of recessions in between, you kind of have to ride through them. It doesn't mean that the bull market is done. But a lot of newer retail investors think that if you get a 50% pullback, that you're not in a bull market. It's like, no, you are. You just don't know the market well enough to see the bigger picture view, in my opinion. Dr. Perrick says, when someone is having a stroke, they lose 2 million brain cells a minute. This means that if a stroke lasts for more than 3 minutes, you could become a crypto investor. I I just thought that was funny, guys. I really did. Mike Zaccardi says the median age of all home buyers is now 49 years old, up from 31 in 1981. Now, you got to remember, he's talking about the median age of all home buyers. So it's the middle age, not the average, but the middle. And I'm willing to bet that the majority of new home buyers are priced out of the market right now. So the affordability, when this went up, you can see in 2020, it was like 45 years old. That drastically increased. And that, I think, deals with the interest rates going up and the affordability. So now we are swapping homes amongst the people who are already homeowners, is my guess. So new buyers are selling their old home and buying another home. So I'm guessing that's kind of what's making up the majority of home buying, home buyers here. New home buyers, obviously, they're struggling. They are struggling. Oil prices. Top oil traders warn of a supply glut, predicting Brent could drop to $60, $70 a barrel. This is 5 hours ago. It's already dropped to 60 something dollars. What are they talking about? But Curry says, overplayed, pointing to an exaggerated Chinese demand weakness. Will sentiment shift? It will shift. Give it time. Repeated nut shots sometimes occurs in the markets. First Majestic announces share repurchase program for up to 10 million shares over the next 12 months. Go First Majestic. Let's get your cash flow up and start buying back some shares. That is what I like to see. Go First Majestic. Warren Buffett on his biggest mistakes. So let's see what his biggest mistakes are. The biggest mistakes I've made by far are mistakes of omission, not commission. So he says it's the things I knew enough to do. They were within my circle of competence, and I was sucking my thumb. Those are the ones that hurt. I've probably cost Berkshire at least $5 billion by sucking my thumb 20 years ago, or close to it. When Fannie Mae was having some troubles, we could have bought the whole company for practically nothing. I don't worry about if it's Microsoft because Microsoft isn't in my circle of competence. I don't have any reason to think that I'm entitled to make money out of Microsoft or out of cocoa beans or whatever. But I did know enough to understand Fannie Mae and I blew it. Those are the big, big mistakes. And I've had plenty of them. And unless I tell you about them in the annual report, and I resist the temptation sometimes, you're not going to know about it because it doesn't show up under conventional accounting. Omission is way bigger than commission. Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. Even to do it on a small scale is just a big mistake, almost as not doing it at all. You've really got to grab it when they come because you're not going to get 500 great opportunities, in his opinion. You can apply this to the gold market and silver market right now, in my opinion, and some of the gold and silver mining opportunities. And if you want to know my opportunities and how I'm playing this and how I'm seizing those opportunities, on the website, I share those opportunities and talk about the companies. Oil stock bag holder, he says it's not just the algos. The oil market is screaming something, but what? Major economic slowdown coming, possibility of OPEC price war. What's going on here? This kind of sustained and indiscriminate selling is rare, and we would be fools to ignore it. Well, maybe people think that there's a recession coming. Maybe. And then fear breeds fear. And then that fear, breeding more fear, means that we get a sentiment washout. And that almost always occurs at the end of these consolidations sometimes, where you get a final selling washout. There's a bunch of maybe stop loss orders that insiders try to hit, and then they go long. And then they squeeze people too, where people go short and they squeeze them on the back end and reverse the pattern. That very well could occur in the oil market. Brandon Balo says Anglo Gold buying sentiment for $2.5 billion. Last month, Goldfields bought a Cisco Mining for $1.6 billion. They are telling you something. Mining mergers and acquisitions is about to heat up big time. Large producers can't get enough ounces organically. So there's a merger going on here for Anglo America buying out sentiment. EIA, we expect Brent crude oil prices will return above $80 per barrel this month. Wait, whoa. This month? And will average $82 per barrel in the fourth quarter of the year. So they think it's just a sentiment washout, apparently. How much stock would I put in the EIA? I don't know. But it does look like we could, have a sentiment washout and then come back up. The physical inventory levels are pretty low. So the physical suggests that we are underpriced. And that's where I get bullish, is when we're underpriced. Tavi says, it's remarkable that most defensive sector of the S&P 500 has officially become the year's top performer, despite the widespread consensus that the economy is doing well. I suppose one could argue that this is tied to AI and electrification related infrastructure developments. And if that's the case, I believe it's one of the strongest macro tailwinds I've seen for overall metal prices. So utilities are the top performer at this time, which is generally a top performer during a slowdown in the market. That's generally when it outperforms. Andreas says, the signs of a rebound we saw through first half have been replaced by renewed pessimism on actual earnings. SMEs are not doing well in the US. So this is NFIB, small business, actual earnings changes. So small businesses not doing too hot. But you could also look at this from a different perspective. We are not that far away from the bottom of 2009, and we're probably pretty dang close to 1980 bottom. That's a good thing. That means that most of the slowdown's behind us, doesn't it? Doesn't it mean that? I think so. North American LNG export capacity is currently planned to more than double between 2024 and 2028. 2023 LNG export capacity, 11.4 billion cubic feet per day. And in 2028, the planned LNG export capacity is 24.4 billion cubic feet per day. That's what's coming. We have a great investment opportunity for natural gas in America. And if you guys want to know my favorite companies, and you guys know if you're part of the website what some of those companies are, this is coming. So we're going to, or at least I'm going to, position for this big export capacity when natural gas prices are at almost all-time lows. They are at all-time lows compared to gold. Natural gas is. Craig, prediction. I think the speed with which we get a return of inflation will be faster than the speed with which lower yields from an interest rate cutting cycle are able to help the labor market. Then things will get really interesting. That is actually pretty interesting to debate. The lowering of interest rates are going to spur more inflation than what it's going to help the unemployment rate. Gary Savage says, unfortunately, most traders today are too short-sighted to make big money. Big money requires patience. Really big moves occur over time and have plenty of setbacks along the way. In today's world of instant gratification, very few traders can hang onto a position for even a week, much less than multiple years required to ride a secular bull. I'm in the multiple years category. At the first dip, they start overtrading and just end up sabotaging their chances of making big gains. I did that last bull market, guys. The reality is that gold is breaking out of a 13-year cup and handle base. I see that. This is going to produce an insanely big move, but it isn't going to happen overnight. There will be corrections like miners are going through now. There will be frustrating sideways consolidations like gold was in from April to August. All of these make sure the average trader gets kicked off the bull and then misses most or all of the next leg higher. The metals sector is up significantly since the 8-year cycle low in 2022. If you are negative during this period, then ask yourself if you should keep doing what you are doing. Do you really think you all of a sudden start to produce spectacular gains if you haven't been able to produce any in 2 years coming out of a major cycle low. And he says you are missing the big picture. This is all I focus on is big picture. And I don't care if people give me crap about the short term. I don't care. I'm in it for the big picture move. I'm going to make this money, period. And I'm going to see it through to the end. And that's going to require me to ride through some nasty pullbacks and some volatility. So be it. I am a function of the game. I'm learning this game inside and out for the years I've been doing this, and I am a product of the game. And to be a winner in this game with the highest rate of success and reliability, you have to adopt a longer time frame. Period. I don't know anybody who's super rich trading around the small little moves. I want the big moves. I want the reliable move. And that requires me to basically hold on through some of this volatility. It sucks. I get it. But I'm riding through it. This is a CRB index. It says not a perma bull because I post bullish big picture commodity charts, or a gold bug because I'm bullish gold in a resumed secular bull market. He's taken the big picture view. No, commodities are simply in a new super cycle bull since 4.5 years ago. We are really just lucky bastards being here at this point in time. And this is the CRB index versus the Dow Jones, which is financial equities, doing a false breakdown in 2020 and then riding higher. We're just getting a little bit of a pullback. Guys, this is so bullish, it's unbelievable on a long-term perspective. So I hope you guys can make the best of it. That's what I'll say there. NextGen Energy has revised the cost estimates for its Rook 1 uranium project in Saskatchewan, with expenses now 70% higher than projected in 2021. The updated capital cost is $2.2 billion, up from $1.3 billion. Okay. So now some of these things are going to start to get updated and you're going to see the real costs coming out. We might need $100+ uranium for some of these things to get lifted off with all the inflation between now and when the project will actually be finalized. These guys have a long way to go before they start producing uranium from that. They have a long way to go, and this number could continue to go up. Here's one. Price dictates narrative. We have less than 1 week of negative price action, and every bank comes out with revised views, and bears pile on. Meanwhile, still looking for the short wrecks all these folks threw out. Because if you believe in WTI in the 60s, none of these inventory short companies make free cash flow. And that's where I'm going to end it, guys, because that's where we're going to end it. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon is still active if you'd like to join. Midweek update's going to be released sometime today. Look for it, where I share my opinions on what I'm doing and how I'm positioning myself. And you can use that for however you like, and my opinions on the individual companies that I follow. All right, guys, that's all I've got for today. We'll catch you next time. This is Finding Value.